Nvidia stock recently had one of the worst performances that the stock has had in years, with the stock being down about 17%. And this is all due to concerns about a Chinese AI breakthrough. But before we react to the headlines, let's analyze the fundamentals to decide whether this is a real warning sign or an amazing opportunity to invest in a great company at an attractive valuation. A while ago, I released a video analyzing Nvidia stock from scratch. And in this video, I argued that Nvidia had some of the best in class product, management, company health, market, but the only thing that was disconnected from reality at that time was the stock price. But with such a sudden stock price drop, this could provide the perfect opportunity for people that are interested in investing in Nvidia stock to get into it. But before we decide, let's do the analysis. So one of the main triggers that actually caused Nvidia stock to drop is the release of DeepSeek. And if you don't already know, DeepSeek is an amazing technology. It's basically like ChatGPT, but it has a model that actually is able to think a little bit, meaning before it answers the question, it goes through a whole bunch of different series of thoughts that you can see on the model. And then after that is able to provide some really good responses to some very deep questions. And the interesting thing about this model is that it's completely open source, which is amazing because it means that anybody can use it. And then the other thing is that it's super competitive. If you can compare it to OpenAI's all-one model, it's very competitive. And in fact, in some of the benchmark, this model actually performs better than OpenAI. And the crazy thing about this, as if that's not good enough, is that DeepSeek claimed that it spent nearly $5.6 million on this model, whereas OpenAI has reportedly spent billions and billions developing these models just for the model not to be as good as this. So this is raising a lot of concerns because historically what's happened is that all these different AI companies like Meta, like Google, they've spent billions and billions of dollars on compute and chips that Nvidia and other companies provide in order to raise the success of these different models that the companies are releasing. But this proves that you don't need to spend that much money to provide a really good model. So the question here becomes, is this going to affect the demand for Nvidia's chips and its products? Now, to address whether or not advancements in AI technology, such as the ones that I talked about for DeepSeek, actually make a difference for Nvidia stock, I did a whole bunch of research on the topic. And keep in mind, I also work in software myself, so I'm very aware with what's happening in the industry. And in my conclusion, while these models created by DeepSeek and perhaps something that other companies can replicate are going to be great because they require substantially less GPU resources to be able to train and obtain a high level of efficiency, you still need Nvidia's and other GPUs to be able to train the models in the first place. And what I see in the marketplace is that across all kinds of verticals, there's a shortage of those components. And this is something that's going to be needed for self-driving cars. This is something that's going to be needed for large language models. This is something that's going to be needed for even new gaming hardware that's going to come out and that needs like new graphics. So these GPUs are still going to have a very high demand. And the fact that Nvidia is able to produce such good products that are technically superior than the others is really going to help them. Now, the other thing to mention is that not only do you need the GPU to be able to train the models, but some of these models are so large that you also need the GPUs in order to be able to run the models and be able to share that with some kind of audience. And yes, as I mentioned, you can see that there's a shortage of these different Nvidia products across all kinds of segments that the company serves. Now, you may be thinking, I'm not worried about the DeepSeek concerns. I'm worried about the geopolitical tension between the US and China. But locally for this, as you can see in many articles, I have talked about this. One of the things that the US did was ban the export of Nvidia's 8100 and H100 chips, which are very, very powerful chips. But as many research firms have claimed, China can complain as much as it wants, but Nvidia is no longer a major player in the direct sales of advanced chips in this market. So this is not a brand new risk that has occurred. And locally for the company, if I go back and I'm gonna use Y-sheets for this, I can select Nvidia, get the geographical revenues for the past, in this case, 8 years, enter the data. What you'll find is that these revenues are increasingly decreasing for China. So this is something that is not new, but they're increasing for many other parts of the world. So the growth in China is really going to be made up by growth in the Middle East, as well as India and other different countries that are becoming more and more compute hungry. With that being said, one of the last concerns about the company is that the Federal Reserve might actually increase interest rates, which tends to bring down the value of high growth stocks like Nvidia. Now, locally for this, the Fed is most likely going to keep rates at the same rate, and there's actually pressure from Donald Trump to lower the rates. However, I don't think this is gonna happen, and the reason why is because the market in terms of jobs in the US have been really strong. Very low unemployment rate is going to be hard to reduce the rates, although this could happen. But if the rates are reduced, which is what Donald Trump is pressuring from, that would only send the value of the stock up. However, the concern is whether the rates are going to go up, but most likely this is not going to happen. Now, with those fears and doubts out of the way, we can go right to the price prediction. As I told you in my previous video about Nvidia, the company has an excellent management team, excellent market, great company health, excellent products, and then of course it all comes down to the price at which you're able to get into Nvidia. So as you can see right now, this is the model and this is my price prediction. So this is the projected revenue growth rate. I think this is a conservative measure. If you look at what some of the analysts are projecting, they're projecting higher growth rates, but I'm keeping this number conservative just because that's the way that I like to do my own investing. At the projected terminal rate, you would think that for a regular company this is pretty high, but keep in mind that Nvidia is growing really fast. So if I look right here, and this is a list of all the different companies that Nvidia competes with that are public companies, you can see that I'm getting all of this different data from Y-sheets, which is an add-on that you can get on Excel and Google Sheets to be able to retrieve all of this data automatically. And what we're looking at here is the price to sales ratio for these different companies. Right now, Nvidia has a price to sales ratio of 26, which is pretty high, but this is the crazy thing. Nvidia has a revenue growth in the last year of 125% and EPS growth of 572%. So that is unheard of. Therefore, this actually justifies a pretty high price. Like, look, if you look at TSM, the revenue growth has and EPS growth is about somewhere between 35%. This still has a PE ratio, a price to sales ratio of 10. So to have this almost tripled, it makes sense that you would have a ratio this high. But in our projection for Nvidia, due to the fact that the company is going to grow their revenues and then perhaps maybe the growth slows or maybe it doesn't in 5 years, it remains to be seen. 25% and 15% terminal value makes a lot of sense. So if we get the data for the last 12 months from Y-sheets, we can project this into the future. Now this year's, I have to adjust them, so I wouldn't worry about this. They would actually have to be the opposite. So this would be 2025, and then we'll look at 2026, 2027, etc. If we discount this at an 11% rate, which I think makes a lot of sense in today's market, and keep in mind, rates are likely to decrease in the future, as I said before. This gives us a present value per share of $125 per share based on the current stock price, which we can refresh right now. So this is 122. So this represents a 2% upside downside percentage, which I think is pretty reasonable. Therefore, I would highly recommend that you do your own research, but this could be a really good potential investment opportunity. And that's the beauty about the stock market. The fact that stocks fluctuate and they go up and down, it's really good because it presents these unique opportunities to be able to buy into these really high quality companies like Nvidia. So I'm very happy in a way that this happened. I personally got into this company, whereas before I just couldn't justify it. So yeah, it's all about taking advantage of Mr. Market market at the end of the day. If you've enjoyed this video, make sure to subscribe to the channel and let me know in the comments what you're doing about Nvidia stock. I love to know, and I'll see you in the next one.